Dan, you've been moderating some fantastic sessions here, and one of the things that came up was about the myth of due diligence and the story that you have to tell operating partners around that. Tell us about what that is.
Well, it's a great question, Adam. There's a myth in private equity that if there's any kind of management due diligence after the LOI is signed, pre-close, that it's going to throw the deal off the tracks. Mm-hmm. And so what we've found is that the myth is that the investment bankers won't give you access to management. There's a myth that that the CEO won't allow you to talk to management, or it will somehow alienate the management team and their future investors. And we've found that it is more of a myth, and there's more and more investors and more private equity firms that are, frankly, looking under the hood and talking to management or assessing management even more formally before the close. I don't know any private equity firms that don't say that they're buying and backing the management team, yet they think they can assess the management team over a dinner or over a 1 hour management presentation.
So let's not be rude about the deal teams, but they kind of need to be brought on board, right? And the importance of talent within the business, that still needs to be telegraphed well to them. Let's talk about that issue.
Yeah, I think there is a way to begin talking about talent early in the transaction, and I think it's well known that the faster you get the right management team in place, the better of an exit or an outcome for all shareholders. And so, what we often do is we coach the deal team to approach management as if you're going to conduct any kind of assessment, evaluation, or look under the hood with the management team, it's not that everyone is interviewing to keep their jobs. It's really understanding, do they have the capabilities, the key roles to execute the value creation plan? And if not, after the transaction, where do you need to move quickly to hire key roles, to develop and coach people, maybe that there's certain training programs. You don't want to find out 2 years into a hold period that you have skill gaps or people gaps or, frankly, the wrong CEO or CFO. Then it's too late and you're going to extend your exit probably 2 to 3 years.
You're striving to have the optimal leadership team in place on day one. That's a clear message to them. It's a clear message to the deal guys. It's a clear message to everybody across the business. How do you go about that, and why is it so important?
Well, I think it's very important to have the right management team and organization capabilities in place as soon as possible in that investment period. That's when you expect the management team to start executing on a value creation plan or a strategy. So it's critical to understand what are the key roles you need to have in place, what are the skill sets you want to develop, whether you've got the right organization structure. You really want to be on the right foot within the first 6 to 12 months in an investment period. Once you get closer towards an exit, maybe 2 years from the actual selling of the asset, it's really too late. And when you start making people changes at the top towards the end, it's very disruptive, and frankly, you're going to scare any potential acquirer.